Andrea Leadsom.
Thank you, Chairman. Mr. Hartzer, how long does it take to move a personal current account from RBS to another bank?
The advice that we give customers is that it'll take somewhere between 4 to 6 weeks from start to finish, but we try to do that a lot faster, and we've brought in things like a switching service, and we've made a number of changes both as an industry and as RBS to try to speed that process up. In our view, switching is a good thing if we can improve our market position and make it easier for people to switch. We think in the long run we'll be winners out of that.
Anecdotally, I've had letters from constituents saying when they switch banks, it's never quite clear who's facilitating the switching, whether it's the bank they're leaving or the bank they're going to, and the banks seem to argue amongst themselves about whose job it is to make sure the direct debits get set up and so on. What's your attitude in RBS? Is it your responsibility to facilitate the move?
Well, certainly we try to help customers do it. The switching service is about getting authority from the customer, but there's certain bits where the bank that is managing technically the direct debits or the standing orders has to actually implement some of those changes on authority for the customer. But we do everything in our power to make it easier for the customer to get that authority through to the people that have to provide it.
And how many PCA customers do you lose and gain every year? What's the turnover?
We're seeing switching at the moment at about 9% of accounts, which is, I should say, about 50% higher than my previous market, which was Australia. So we think this is actually a pretty active switching market. We opened a little over 1 million new PCA accounts last year. About a quarter of those were people switching banks to us.
And what's the extent of cross-selling with your PCA customers? What sort of product penetration in terms of other sales are you successful with selling to those customers?
Well, cross-selling is certainly an important part of what we're trying to do, because in the end our strategy, and as Stephen said, there are banks that have quite reasonably different strategies on this. Our strategy is to try to be a full-service provider and to differentiate ourselves by having good, strong relationships with customers that mean they trust us and want to bring more of their business to us over time. I would love to say we were incredibly successful at that, but one of the things that we need to do at RBS is get better at that. At the moment, about just under 40% of our customers only have one product with us, and so we think that's a pretty big opportunity, and about a third of customers have 2 products with us. So that's something that we're continuing to work on.
So would you say that your retail customer business is profitable?
Overall, the business is
overall.
profitable, yes.
Okay. And would you accept that, bearing in mind the evidence of the level of concentration, 73% of PCA accounts are held amongst 4 banks, would you accept that it seems that when you take into account the OFT's assessment that there is very little switching, that there is a great deal of customer inertia, would you accept that it looks as though there are barriers to entry and it is not a highly competitive marketplace?
Well, I wouldn't accept that it's not a highly competitive marketplace. As I said, I came from Australia where the market was more concentrated than here. I can tell you, even in Australia, we fought very hard amongst ourselves to try to gain market share and found that to be a very competitive market. Here, we have more competitors. I mean, there are 6 major players on the high street at a minimum that we compete against, plus a number of smaller players, a number of new entrants. As I said, switching is 50% higher than it was in my previous market. And we've seen the industry and ourselves make a number of changes to reduce the barriers to switch. And it's interesting, if you look at the OFT study that just came out on switching, even that study says that 80% of people don't switch fundamentally because they're satisfied with their bank. And that may not be popular in what the popular press likes to talk about, but that's actually what the OFT study says, and it's what our own research suggests as well, is that the reputation of the industry may be under challenge, but at an individual customer level, they generally have a pretty high level of satisfaction with the staff member that they deal with in our bank.
So why do you think, then, that there's only been 1 new bank licence awarded in the last 3 years, I think, 3 or 4 years, according to the FSA? Why are there no new players coming in if it's a lucrative and competitive market?
Well, I think the fact that it's profitable doesn't mean necessarily that the returns are so high as to attract lots of new entrants. I think, as Stephen said, our view is that over the cycle, this is a business that's very capital intensive, and investors want to earn a reasonable return on that capital. And our view is that over the cycle, the returns on capital are adequate but not so exciting as to want to bring new competitors in. I think the other thing I would add perhaps is certainly the more regulation that gets applied and the more complicated that complying with that regulation gets, that obviously becomes a bit of a challenge for people as well.
So do you think regulation itself could be a barrier to new entrants?
Well, I think you have to take all these things in the round, and when you add up the capital requirements to compete in the business, the level of returns that are available over the cycle, and in some cases some of the regulatory issues and so forth, which mean that one needs a reasonable amount of capital and cost if you want to do a full-service bank, that's a challenge. Although, as Stephen said, there are still a number of opportunities for people to come in and cherry-pick particular aspects, and we've seen that continue to happen. That puts challenge on the model for a full-service bank like us.
Okay. Mr. Hester, one last question. Would you support the idea of giving customers the opportunity of taking their bank account number and sort code with them? Clearly that requires big technological change, but would you consider that that might allow more switching and less customer inertia than is already the case?
Well, I think that generally we support competition, the ability of customers to move, and transparency in banking, and believe all of these can be moved forward, and indeed part of Brian's strategy is to do so. Of course, there are some times when specific measures, when the benefit can be outweighed by the disbenefit. I'm not a great technical boffin, but to date, my understanding is that the specific issue around sort codes would be so chaotic as to have such massive disbenefits that the incremental ease of switching wouldn't be worth it. But certainly we're always willing to look at issues like that, because we would like our customers to be with us for positive reasons, not for negative
Can
reasons.
you get your boffin to write a paper to us on that?
Happy to.
For us on that. Thank you.
Thank you.
John. Andrea Leadsom.
Thank you, Chairman. Mr. Higgins, we've had some very interesting, complete conflicts of opinion this morning, where we've had the both Lloyds HBOS and RBS claiming that the PCA market is highly competitive, that there is very little cross-selling, that the cross-penetration is not high, that there are no barriers to new entrants, and indeed that they fall over backwards to accommodate the switching of personal current accounts. And I think you're hinting at the fact that that's not the case in your opinion, and your view would be shared by Sir Don Cruikshank, who gave evidence to this committee, saying that he believes that the barriers are those of new accounts, new current accounts. And indeed that would appear to be shared by the OFT, who think that there isn't enough competition, that switching is very low, that there's great customer inertia. So just by way of the background there are these enormous conflicts that have come out today. What is your opinion? Sir Don Cruikshank told us that the banking industry should be stripped of its control over the shared network infrastructure. Do you agree with that? In other words, that they should not any longer be allowed to own and manage money transmission services on their own, to their own rules?
I don't think that is the issue. I would rather go back to some of the points you made earlier. Let's address the question, is the market for current accounts competitive? Well, if we go back to first principles, what would make a market competitive? A market would be competitive if there's a sufficient number of suppliers offering a sufficient range of choice to customers in an environment where the customers are well informed through transparency and full availability of information, and where there are no perceived or real barriers to switching. If we address the PCA market against that level of criteria, I think it becomes very clear that we don't need to hint at a conclusion. It's an unequivocal conclusion that the market is not competitive. We shouldn't look at the market shares. They're actually not the issue here. What we've got to ask ourselves is, what is it about the customer's behaviour? What is it about the companies who serve those customers' behaviour that tell us the answer? And if we look there, we find that the FSA did a study only, I think, last year, where 39% of customers said that all banks' products were pretty much the same price for the same sort of outcome. Now that's palpably untrue. It's untrue for individual banks, never mind across different banks. So there is a lack of transparency. We already have discussed in brief the amount of income that flows to the banks in respect of current accounts, but that's not something that customers are aware of. So there is a distinct lack of transparency and disclosure of information.
So would you highlight transparency, in other words, the customer knowing what their current account costs them, or conversely, what the profitability of their current account is to their bank? Is that the one key thing that would make the difference?
Well, there are two that will make a key difference. One is full disclosure. Yeah. Now, there is an OFT initiative to do so. I just hope that in 3 or 4 years' time that progress has been made and it's just not a bunch of initiatives that never come to fruition. But there are initiatives that will bring greater transparency to this particular question. But the other issue is the question of how easy is it to switch perceived and real. Yeah. Now, again, we can look at OFT data where a quarter of customers who switched said they wouldn't do it again. A third of customers who switched said they wouldn't recommend it to a friend or member of their family. So, yes. So unequivocally, I think what we have here is evidence that there is an absence of proper transparency and disclosure, and there is a perception, and indeed there's a reality. A quarter of customers who do switch also say they encounter some difficulties around the process. It's not all the bank's fault because the direct debit originators are involved, but there needs to be creative energy and momentum to solve the problem. Until these two factors are resolved, you cannot describe the market as competitive.
Yes, and I completely agree with you there, and certainly have had a lot of letters from constituents who've had a complete nightmare trying to switch accounts from one provider to another, and in particular what they've highlighted is that it's the argument between the bank they're leaving and the bank they're going to as to who should do what that causes the hold-up. Certainly both of our earlier witnesses were suggesting it takes 4 to 6 weeks to switch accounts, which is an extraordinarily long time. So Don Cruikshank suggested to us that the key to changing this was to have a new licensing regime for money transmission systems, chaps and backs and so on, that would require that banks allowed complete account portability, rather akin to what he achieved when he was leading Oftel with telecoms, taking your phone number with you. What he was suggesting is that you should be able to take your bank account with you. So in other words, it would be for the banks to find a way to enable you to take your bank account number and your sort code with you so that you did not have to re-establish your direct debits and your standing orders and so on. Do you think, could you comment on one, technologically, is that possible? Obviously it's not today, but is it possible? And secondly, would that then solve the problem? And I just want to be very clear, this would be consumer choice, because actually a number of people have commented, well, that sort of smacks of Big Brother, an account number, cradle to grave. Obviously it's about consumer choice. You can change your bank account number if you want to, but equally you don't have to. So with that in mind, could you comment on that, please?
Many things are possible at a price. What I would find it very hard to gauge is just how expensive that particular initiative would be. My best guess is it would be very expensive. And so whilst I think it should be explored, because it certainly has the kind of, if you like, there's the embryo of a very good idea, but it has to be fully costed and understood what the implications are. But beyond that, the real question is there a real energy to make switching straightforward, whether that's the solution or some other one is?
So when you say, is there a real energy, do you mean your suspicion, I don't want to put words in your mouth, but is your suspicion that the banks will collude to avoid this happening because it would, at a stroke, remove barriers to entry for new market participants? No,
I'm just simply saying that this is not a trivial problem to solve. It will require a great deal of focus and momentum, and I'm saying no more than that.
Okay. But then do you think if those obstacles were overcome, do you think that that would create a radical difference in the competitiveness of the retail banking sector?
If you look at other aspects of financial services where there is greater transparency, where there is a much easier switching process, you see much higher activity around switching. The number that gets quoted for current accounts is usually around 7%. In fact, I saw some data the other day which suggests that if you take out secondary accounts, the real underlying switching is probably more like 3. It's very, very low. However, if you look at, say, credit cards, for example, the UK Cards Association has just published some numbers showing that in the last 12 months, no less than 27% of customers have either taken a new card or a first card, and indeed 14% of them actually closed the card that they had. So in a market where there is an ease of switching, where there is transparency around what you get charged and what you get, customers will be more active, customers will switch. You know, one of the tests in competition I would suggest would be, is there evidence of customers having a product which, if they were to look at what they were charged and what they got, would understand and don't move, despite the fact that there are alternatives there that would serve them much better. Against that test, I think current accounts fail.
Thank you.